Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Friday morning pre-market webcast. Okay, so yesterday we talked about Bollinger Band compression and see how tight these bands were, very similar to how the bands were back in August. And we talked about how the expansion went a lot deeper and a lot farther than people expected. So yesterday, we were just kind of waiting for a direction. Well, yesterday the Bears had a decent day. They pushed down through the lower band. We did a little bit of a bounce back up as high as, what's our Globex high? 1828. And then early this morning, we came back down to make new lows. So two things are happening right now. The middle band, the 20-day simple moving average, remains resistance. We've made new lows versus yesterday's lows. And now you're starting to see the bands just beginning to expand. This line here, which was flatlined pretty much yesterday, is just starting to raise up off of this dashed line. I don't know if I can even get in that close to show you. I really can't. Which indicates that the bands are starting to expand. Okay? So there's two scenarios here. This could be the greatest head fake of all time, okay? And if it is, then the Bears are in serious trouble. Or it could simply be a band, a lower Bollinger Band ride that could last, anywhere from 3 to 5 days, and should take us down in, solidly into the 1700s. I am short 1821. We were short a couple times yesterday, short and covered. We messed around with the long for a little while. And I've taken I've taken half of it off down here at 1809. But I'm letting the rest trade for a while because I want to see if the lower band now, which is at trading about 1814 half to 1814.75. I want to see if that becomes resistance. That's kind of step 3 to a band ride, because these bands are so tight, it's going to trade in what I call the channel, this channel between the second and third standard deviation bands. Third standard deviation bands come in today right where the 50-day exponential is, right around 1806. See what I mean when I say the bands are way too tight? I mean, you can't just treat these like normal bands and start, doing Pavlov's dog off the lower band, because they're too tight. They're way too tight. When they're this wide, when they're doing this, I get that. When they're this tight, you got to be careful. And if you do long it, it's got to be for, kind of a short-term trade, at least after we figure out that we're going to ride down. Yesterday's long, a lot of people were long down on the lows yesterday, which is a fantastic trade. I mean, that was a 13-handle trade. At this point, though, if this action continues, if this band wants to be resistance, then you need to be very careful. You really need to be in sell rallies mode. Okay. The first indication that this is not going to ride the lower band is that we will lose the lower band itself as resistance. We will then take out the Globex highs at 1828. So what I'm doing today is I have a good position on, and I'm going to let it trade. I'm not going to try to over-manage it. I'm just going to let it work, because if the theory plays out, then there's lots more handles on the downside. But that remains to be seen. We're early on. But so far, step 1 and step 2, stay below the middle band, take out yesterday's low. So far, the Bears have done the two things they've needed to do so far. Step 3 is keep the lower band above them for the majority of the day. All right, take care. Follow me on Twitter at Princeton Trader. Check out the website. Come check out the chat room. Come trade this stuff with us. Have a fantastic weekend. I will be back Monday morning with another webcast. Trade them well.